Hello and welcome to our channel. Did you know that Bitcoin has been dubbed digital gold? But could it really replace gold as a safe haven investment? Today, we're tackling a hot topic in the financial world. Will Bitcoin eventually overrun gold as a safe haven? With economic uncertainty on the rise and inflation affecting global markets, many are questioning where to park their wealth for maximum security and growth. Let's dive into this fascinating debate and explore whether Bitcoin might surpass gold as the go-to asset for protection and investment. We'll delve into the characteristics of both Bitcoin and gold, benefits and drawbacks of cryptocurrencies versus traditional assets like gold, explore the historical significance of gold, the rise of Bitcoin, and the factors influencing their roles as stores of value. We'll analyze market trends, expert opinions, and the emerging landscape of digital currency. Whether you're a seasoned investor or just curious about the future of finance, this video will provide you with valuable knowledge of the crypto versus gold discussion and offer surprising insights that could influence your investment choices. Don't forget to like, subscribe, and hit the notification bell for more in-depth financial analysis and discussions. Recent trends show a significant surge in gold demand. In South Korea, for instance, gold bar and coin purchases have jumped 27% over the past year, marking the highest increase in more than 2 years. Convenience stores in South Korea are even installing gold vending machines to meet this rising demand. Why is this happening? The post-pandemic inflation surge has led people worldwide to seek out reliable assets to protect their wealth. Gold, with its long history as a store of value, is seeing renewed interest. In the United States, retail giant Costco recently sold out of 1-ounce gold bars within hours, prompting them to limit purchases to just 2 bars per customer. Wells Fargo estimates that Costco could be selling up to $200 million in gold bars monthly. Globally, inflation has spiked, with rates jumping high. As a result, gold's value has risen, with a 49% increase. Bitcoin's volatility and the current narrative. While gold is thriving, Bitcoin has been experiencing a roller coaster ride. After reaching an all-time high earlier in the year, Bitcoin is down 22% and has been trading sideways. Recent headlines are bearish, with predictions of a huge price crash due to economic uncertainties. Critics argue that Bitcoin's volatility, dropping 20% in a single day, makes it a less reliable store of value compared to gold. However, this perspective may overlook some key factors. Bitcoin versus gold. A comparative analysis. Gold has been a traditional store of value for over 2,000 years, and its stability is well documented. But Bitcoin, despite its shorter history, has shown remarkable resilience and growth. Since its pandemic lows, Bitcoin has surged 1,434%, while gold has only increased by 49% during the same period. The digital world is expanding rapidly, and Bitcoin represents the digital evolution of value storage. Millennials and Gen Z, who are accustomed to digital assets, are leaning towards Bitcoin as their preferred safe haven. According to a survey, over 2/3 of millennials favor Bitcoin over gold. Why Bitcoin might overtake gold? Here's why Bitcoin could potentially surpass gold. 1. Digital convenience. Bitcoin is inherently digital, making it easier to store, transport, and use compared to physical gold. You can carry billions in Bitcoin on a flash drive, something impossible with gold or even cash. 2. Transparency and scarcity. Bitcoin's supply is capped at 21 million coins, and its issuance is predictable. In contrast, gold's total supply is uncertain. We don't know how much gold remains underground or how much is in circulation. 3. Adoption trends. As we're approaching the greatest wealth transfer in history, with $84 trillion expected to be passed to younger generations over the next 20 years, these younger investors are more inclined to invest in digital assets. They are expected to allocate a significant portion of their wealth into Bitcoin. The future of Bitcoin. Bitcoin's adoption is still in its early stages. As of now, over 219 million people have owned Bitcoin, but this is just 2.7% of the global population. The number of Bitcoin holders in the US is about 7%, compared to 62% of Americans owning stocks. Boston Consulting Group predicts that the number of Bitcoin holders could reach 1 billion by 2030, a nearly 5x increase. If only half of these new holders buy Bitcoin and invest $1,000 each, this would create substantial buying pressure, potentially increasing Bitcoin's value significantly. Additionally, 66% of all Bitcoins have not moved in over a year, indicating a strong holding pattern that could limit market supply and drive up prices. Bitcoin is volatile now, but as the asset matures, this volatility will decrease. The key takeaway is that while Bitcoin might experience short-term fluctuations, its long-term potential is promising. Bitcoin versus gold. In summary, while Bitcoin offers unique advantages, gold's stability and history still hold significant value. But while gold remains a time-tested safe haven, Bitcoin is rapidly establishing itself as a formidable competitor. Its digital nature, transparency, and growing adoption make it a compelling alternative. So which will prevail in the long run? Gold will continue to be a reliable asset, especially in times of economic uncertainty. However, Bitcoin's unique advantages and the shifting preferences of younger generations suggest that it might one day surpass gold as the ultimate store of value. So, if you're considering where to invest or store your wealth, both gold and Bitcoin have their merits. The key is to understand your risk tolerance and investment goals. Thanks for tuning in. Let us know your thoughts in the comments section. And if you found this video insightful, don't forget to like, share, and subscribe. We'll see you in the next video.